I think there are a couple key points here, and it's interesting that the U.S. Energy Secretary thinks that getting rid of all Iranian barrels from the market is something that the market could tolerate. I think he's probably right, but it's not going to be quite as easy as he thinks. There's definitely spare capacity on available that could definitely make up for Iranian barrels if they choose to really squeeze on the sanctions. But I think you will find that China will get very, very upset by this because they really like their discounted Iranian oil. But given that President Trump seems to want to negotiate all things with China, I'm sure that this is also up for negotiation. Maybe if China agrees to buy less Iranian oil and really help squeeze Iran, President Trump's willing to make changes in the tariff regime there. So I wouldn't be surprised if it's all together, it's all lumped together, it's all up for negotiation. I do think that when you look at maybe a potential for more Iranian barrels to come on the market down the line, say after some kind of an agreement, that's something that the oil market and the global market's going to have to work out. It would be great if that happened in conjunction with an economic boom where demand is trending higher than opposed to right now where we're not really so sure.
Ellen, I was struck, I don't know if you were, by what we heard there from the Energy Secretary at the end of those comments. He says he doesn't have a price in mind and there's no formula for a good oil price. I'm surprised only because he was the CEO of Liberty Energy and has spent his whole career in the energy business. I would assume that he would have some sense of that. What do you make of that? As you look at WTI here at $61.44 a barrel and we see these prices drifting lower over the course of the week, this is bound or likely to pose some problems for producers here in this country. How do you identify a good price here for oil in this environment?
I think the Energy Secretary was giving the Ali Naimi answer, and everyone would ask him. He used to be the energy, for Saudi Arabia and the CEO of Aramco, and he would say, if I knew what oil prices would be, I'd be in Vegas. Or there is no perfect oil price. So he was really channeling that. He definitely has an optimal oil price in mind. The question is it the optimal oil price for consumers or the optimal price for producers? And those are two very different things. And so right now, U.S. producers are not really liking oil prices right now. They'd rather see things higher, particularly because their costs are increasing. The cost to complete a well has just gone sky high with all of these tariffs on steel and in particular the tubular goods that they need to complete wells. And so, with prices trending lower, they're going to have to ask themselves, is it really worth it to complete this well here at current prices? And so those are some hard decisions that producers are going to have to make, and every producer has a different price point at which it makes sense. Smaller producers, they're going to be the first to shut in. Larger producers like Exxon, Chevron, they're going to be able to keep going for longer.
Well, so is what I'm hearing from you, Ellen, that this notion of unleashing American energy, drill, baby, drill, that's going to offset whatever cost pressures may arise, or at least a good deal of cost pressures that arise from higher tariffs on imports, that's not necessarily how this is realistically going to go down in terms of domestic production.
I would say that I see drill, baby, drill and, unleashing American energy as kind of more of a long-term strategy. Right now, we're at very high levels of production. We really don't actually need any more American oil coming into production right now. But, 10, 15, 20 years down the line, we're going to need that. And the things that we can put in place now and do now are going to make it possible for us to unleash American energy dominance in 20 years. So I think that they're not necessarily meant to coexist. The low oil prices, the trade wars right now, it's really causing some pain. What producers would really like now is some reassurance from the Trump administration that this is a temporary turbulence. It's going to be behind us soon, and they're going to be able to make decisions about how to deploy capital for the future as soon as this shakes out.
As soon as this shakes out, and you've taken us right where I want to go, which is how are oil companies looking at the uncertainty we've been talking about? So kind of dovetailing this conversation about tariffs policy and this 90-day pause with your world with oil, I imagine it's having a chilling effect, as it is in many other sectors. What is the oil industry waiting for? What would amount to the kind of certainty they need here to proceed with capital expenditure in the way that they were before?
That is a really good question. And I think what they need is some kind of roadmap for what the Trump administration is planning for the next 4 years when it comes to energy policy. What are the regulatory changes going to look like? What's the regulatory regime going to be? All we know is that some of the regulations from the Biden administration have been done away with, but we don't know what's coming in their place. They don't know, and they would like to know. And so the best thing that the Trump administration could do for the energy industry right now is to give them a roadmap. Here are the kind of permitting, things we're trying to do, we want to put in place. Here are the steps we're going to take to ensure that these changes that we're making can't be undone by a future administration. Yes, these trade issues are a big deal now, but we expect in a year or a year and a half, there's going to be a lot of American-made steel available for purchase. And here's what we're going to do to make that possible. And those kinds of things would really help the executives at these oil companies feel more secure about making decisions to deploy, capital, to say yes to that big project, to drill exploratory wells, because they will have this surety that they need that, yes, when they apply for that permit, they can expect to get it in 30 days, not a year, and not have it challenged by 10 different people.
Ellen, I'd like to ask you about something else that the president has floated and we haven't heard as much about, at least within the last week or so, which is this notion of using secondary tariffs, which isn't something that has previously existed in geoeconomics, on countries that buy oil and energy from Venezuela or Russia. He has threatened to do this depending on whether or not he extracts the behavioral changes he would like to see from Venezuela when it comes to cooperation with migrant issues that he thinks they are not currently cooperating with the administration on in Russia when it comes to ongoing conversations around ending the war in Ukraine. Is that threat real to you? What would secondary tariffs on that crude actually mean for the global market?
Yeah, that's a very complicated question because we know what secondary sanctions means. I think that the difference that we're looking at between a secondary tariff in whatever that looks like and a secondary sanction might be that sanctions are actually really hard to enforce. So really, the way that it works is that people get scared about sanctions being enforced, and so they adhere to them. To actually enforce a sanction requires a lot of effort and time, and you've got to make a really big case. You've got to assemble a lot of evidence. And only then can you find them and get the money, and it takes a long time. With tariffs, I think the idea is that it's much quicker. You're not going to have to go through an entire process and assemble all this evidence that, he can kind of say, all right, well, I'm putting this tariff on Spain because they're buying, this thing from Venezuela, and Venezuela is not, concurring with what we want in terms of their drug policy. And because he has a lot more leeway with how to deploy a tariff, it can be deployed much faster than, say, enforcing a sanction. But I'm kind of in the same boat as you guys. We're not exactly sure what this looks like because we've never really seen it employed before.